If you're an aspiring Forex trader and you would like to see real trades being placed start to finish, the full process of how they're taken and the final result, this is the video for you. What I'm going to do right now is I'm going to show you guys a trade that I just took here on USDCHF. I'm going to break down the full component as to why I took the trade, and if you stick around to the end, you'll see how the trade plays out, how I manage a trade, and whether I can make some money on this position or not. Let's get started. Taking a look at USDCHF, we are looking at the 4-hour chart, and I want to actually start by backing out to the daily chart. If we look at the daily chart, what you can see here is that long term, the US dollar has been very, very strong. Now, if we head back to the 4-hour chart, what we've noticed here is that in recent times, we have seen a little bit of dollar Swiss bullishness. And actually, you can see I'm logged into my broker here, Awanda, down at the bottom of the screen. And I actually recently took a trade on USDCHF. I made some money last week going long on this pair. You can see my orders here. So I went long, what was this? I went long 78,000 units and closed here for a nice little profit. Nothing crazy, but this week I'm getting another chance, I think, here. So let me show you a little of the technical analysis behind the trade, and then I'll talk a little fundamentals and we'll watch the trade play out. Okay, so last week I took that trade on a retest here and jumped right in my favor. It was awesome. Now this week we're getting a little bit more of a discount on the US dollar. What I like to look for when I'm taking trades is pullbacks in the context of strong trends. Now we've seen the dollar Swiss break out here really nicely. We are now getting a pullback, and I identified a couple spots that I really liked here on the screen. And so what I'll do is I'll go ahead and mark some spots. So I like this spot and I like this spot here. So let me show you what the significance of these two levels is. So if we just look at why I chose these two levels to mark on my screen, what we can see here is that historically this spot was pretty significant for bears, meaning that each time price came up to this area, we saw pretty strong rejection, and then finally a big breakout. Now that showed us that, okay, that was clear decision from the bulls that things were looking optimistic, things were going higher, etc. Then on the way up, we sort of retested here, rallied from there, and again saw that same area act as support. The reason I'm highlighting why these levels make sense is that now going forward, I'm going to need to know what these levels that I'm looking for are and why I want to enter trades at them. So we came down here this week and we saw a nice little bounce off of this level so far. And after this retest, we got this candle right here. And I want to show you this candle because this candle was what kind of really got me interested in actually taking a position. This candle right here. What you'll notice is that the candle shot to the downside here, but by the very end of this 4-hour candle, we were all the way back up almost 100% of the way. And that showed as we came into this area that there was a lot of buyers who were ready and willing to prop up price down here at around 97.50, 97.40 in this range. So that told me, hey, there's a lot of buyers here lined up to buy it, and that could tell me that there could be some willingness for this thing to actually shoot to the upside. So that was actually the candle that really intrigued me to actually taking a position. Now let's talk about why I actually, or where I put my stop loss. So I put my stop losses at a very particular level. If you look left, this was basically the point at which we saw the max buying pressure. We saw a really strong willingness from buyers to shoot this price off. If we come down and that does not repeat, meaning we come down to this level and we fail to do that again, I'm just going to go ahead and cut the trade. This would be my, okay, back out of the idea spot. That's where I'm going to basically lose $400 if I'm incorrect about this idea. Now, you may say, well, Nick, where is your take profit? And why don't you have one on your screen? Sure, I could drag a take profit and put it as a particular level, but my style of trading, what I like to do is trail stops. So for example, let's say that this price moves in my favor rather than going against me. Let's say that this actually goes in my direction and we shoot to the upside. At that point, what I can do is at about a 1-to-1, meaning this distance, which is 45 pips, which I happen to know because that's how much I chose to risk on the trade. If I measure this out, it was a 45 pip stop loss. So if this thing goes in my favor by about 45 pips, that's about the point where I'm going to go ahead and take my stop loss and I'm going to move it to break even. So I can take this stop loss here and move that to break even. Now, if that process were to repeat and we continue to go higher, what I'll do from there is trail my stop loss even more. and follow price with a stop loss using market structure. I am a technical trader. I use price action to the best of my ability to try and trail and follow trades and let them become bigger winners if they want to trend in my favor. My best trades tend to be ones where I just trail stop losses for a very long time. Anyways, let's talk a little bit about the fundamentals. Why do I want to buy the dollar and why do I want to short the CHF? Well, let's pause and I'll come back and show you guys why. What we're looking at now is the A1 Edge Finder and the tool that we use to track smart money positions. And this is something that is really kind of new to the industry. This is something we've been pioneering and working really hard on. We've been able to make it so that you can actually see positions wise what institutional traders, according to the Commitment of Traders data that we get once a week, is telling us what institutional traders are doing. So check this out with me. If we zoom in here, you can actually see that looking at the US dollar, there's an 80% long reading. Basically, 80% of the futures market positions open on the US dollar are long from the non-commercials that we get the COT data from. Conversely, take a look over here. We actually have 69%, nice, short on CHF. So this tells us, okay, maybe bias towards shorting the CHF and actually going long the US dollar. I use this tool very often to track what big money, smart money, institutional traders, whatever you want to call them, what they are generally positioned on, and then I use it to my advantage to try and position myself, in most cases, with the smart money traders. Now back to the charts, let's talk a little bit fundamentally about the US dollar. Right now, we see inflation red hot in the US and a Fed that very much wants to combat that by raising interest rates. If you're not familiar with interest rates, I have videos all over YouTube about them. Maybe you can check that out. We'll put a card up on the top of the screen for you to watch if you want to learn about interest rates and that sort of thing. But the gist of it is basically that when interest rates are rising, it's usually attractive for the currency because it's attracting foreign investment. A higher rate of return for foreign investors brings people to buying the bonds of a country, buying into assets of that country, etc. It attracts foreign investment, basically. It also acts to suppress inflation, and that's why central banks do that. So right now we're seeing a very early, or what I would consider an early stage to a very hawkish rate hiking cycle here in the United States. And that's been one of the drivers for the US dollar bullishness and why I'm very willing to actually hold on to a position on the long side for the US dollar. Now, of course, we'll see how this one plays out. What I'll do now is I've outlined where I'm going to take the trade to stop loss if I'm wrong about this, what I'm going to do if I'm right. In this trade, what we'll do is we'll watch the trade start to finish, and I'll come back with an update once I have one for you guys. All right, guys, welcome back to your next update here on the USD CHF trade. It didn't go very hot. And I want to talk about it. I want to talk about what happened, why did this trade go wrong, and is there something that we can learn from it? Now, let me first say this. The first thing, well, you can see, let's just recap what happened. I went long, price started to react well at this level. In fact, I was in the blue for a little bit, in profit for a little bit, and then we had some news. We had some unexpected events that just came out of nowhere, threw the dollar to the downside, and took me out of my trade for a loss. You can see that I actually got out of the trade right here. You can see that little peg below my current spot, like right around here is where I actually got stopped out of the position for a loss of, let's get a drum roll, please, $405.39. Now, to add insult to injury, let me show you this. Look at this. I also, at the very same time, took my Euro CAD trade that was going well. Well, it was going okay. It was trading sideways, looked healthy. It popped against me and went against me. I took 2 losses last night. I woke up this morning and I got slapped by the market. It happens. It happens to the best of us. But now, let's answer the question that really matters here. What happened? Why did we lose money? What's causing us to fall apart here? Well, let me reconstruct this because I know I've been doing this for a long time. Like, I have been trading, I have been placing trades. I've placed thousands of real trades on the market, my money on the line. You know, I've done that so many times, and I've learned some things along the way that hopefully I can try and help you out with. At least share my experience here on YouTube. Look at this. The first thing that people are usually going to question every time I post a video like this where I lose, I get questions about, well, your entry was bad, right? This is the first thing that new traders, especially, they obsess with the entry. Your entry was bad. You should have known this. You should have done this. This indicator was telling you this. The RSI divergence was telling you this. Support and resistance was wrong. Trend line, you should have seen this. Overall downward trend on the 4 hour or the week or the 1 year. I don't know. There's a lot of things that you could start saying like, oh, well, the entry was wrong because this. But I could tell you at any given time that an entry, if it goes bad, I could tell you why it went bad, because you could find something to say that was wrong about it at any entry. The point that I'm telling you this is because this is a dangerous thing. This leads to something what we call the cycle of doom. COD, like Call of Duty.
Let's do this.
Listen, the cycle of doom is this concept where traders constantly change strategies because they think what they're doing is not working. And what is working per se in the markets? This is an important learning lesson. So if you stuck around to this video to this point, thank you for being here. This is where things actually get interesting, because everything before this, right? Everybody wanted to see the flashy entries, the flashy entries and the massive profits, or, massive losses maybe if you're more cynical and you want to see me lose money. Like, I lose money, but I lose money, I make money. It happens to every single trader. But here's the thing. What I want you to do is I want you to throw this idea out the window. I have back tested my systems, and hopefully before you place money on yours, you have done the same. I've back tested my systems. I've been trading the same system for years and years and years. And I know that there is a keyword here that you must accept if you're going to be a trader. The markets are not that predictable. Something like this, like big news, can change your entry. Even if you had a pinpoint perfect technical entry, something can change for the market and cast it the other direction. So we need to accept that there is a big V word coming. Well, what is that V word? I'm going to spell it out with my mouse handwriting. Variance. Now, I was only ever actually introduced to this word, at least in the confines of trading and the likes, by a blackjack player or blackjack professional on YouTube, somebody who is consistently profitable at blackjack, which is there are some similarities between poker, trading, blackjack, professionals that can actually beat the game, just like beating trading. There is something called variance, and variance is where even when you have an edge, you are expected to lose sometimes. Even when everything is set up, you play, let's say that you're playing blackjack. And if you are familiar with blackjack, it's a game that goes to 21, right? And let's say that you come out and you have a 10 and another 10, okay? We're going into blackjack land for a second. Obviously, you have a 20. And so you're feeling really good. Everything so far, you have played really well. You got your 2 cards and you're saying, good, my bet is probably going to win. I'm going to make money in blackjack today, right? And then what happens? The dealer hits 21. They get a 10 and an ace, right? And that puts them at 21. Even if you're not familiar with blackjack, basically the dealer goes second and they hit 21, let's say, and they win the whole thing. You lose your money. You played the hand correctly, but the dealer still wins. Not all the time are we going to take an entry and expect a perfect result. The markets are not that predictable. And if you're one of my followers that is closely watching my content, do me a favor. If you watch to the end of this video, it's just gonna make me feel good to know that somebody's hearing this and actually like, okay, they're vibing with what I'm saying. Please do me a favor, comment down below. I made it this far in the video. I made it to the end of the video. It would mean a lot to me just to know that somebody hears this and is like, I'm picking up what you're putting down, Nick. Like, okay, we cannot know what the market's gonna do all the time. Like, that's ridiculous. Like, the market is so much bigger than any one of us. Not some technical indicator is going to tell us exactly what's gonna happen. We have to accept that the market has variance. There's just gonna be unexpected stuff that comes and wipes out of our trades. That is why, you guys, we have to trade with small size so that we can't lose everything on one trade, because we don't know what's going to happen on one trade. One trade is one trade. Trading should be a focus of thousands of trades to prove an edge, not trading over the next 2 trades to make a massive sum of money, right? Not like that. Anyways, we're out overall for like $600 here between the 2 trades. So I'm going to go ahead and put that on the thumbnail, make it even more. I'm going to put my thumb on the, the pain there, $600 down instead of just 400, even though on this particular trade we lost 400. I hope that this was a learning lesson for you. It certainly is always fun for me to go over my losses and my wins here on YouTube. So smash the thumbs up button, subscribe. See you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.